Alrighty, what's going on, family? Back at it again. This is another video, but it is dealing with the New Zealand economy. So straight to business. Looking at the charts. I mean, overall, you see it's in a downtrend for sure. Um, with the same with the Australian economy, they also was doing bad within Q3, Q4. Things are starting to stabilize, but it's really off the strength of the um, globally things are slowing down, and that's kind of giving a relief for the New Zealand dollar, right? So looking at what they have coming out for this week, they got the credit card spending year over year. I'm pretty sure. I guess I didn't finish everything as of yet, but I think this is pretty much going to go down. And as we go through the data, you'll see why. The consumers really haven't been feeling too confident about things. They still are being pressured by a lot of things that's going on in the economy. I did fill out this one, expecting a decline since New Zealand has a weakening economy. Jeez, excuse me, y'all. Now January was pretty good. It was actually pretty strong. Um, but sometimes you want to look at the overall picture of the economy, and that could have been a slight bump. So, based off of January's data, the start of Q1, it could possibly increase, and that would be something I would take in consideration. But just knowing what's going on with the economy, I am betting. I'm not placing the trade because I'm going to be taking a look at the data, right? Um, I think that is going to decline just based off of some of the things that the New Zealand dollar has been going through. Roy Morgan Consumer Confidence is dealing with this one is dealing with the consumers and the overall household spending across New Zealand. That too in January was pretty strong. However, I think there's going to be a decline, but we will see. Now, getting straight to business, manufacturing. Um, so this is recent. This was in January. This is the manufacturing PMI in New Zealand. Pretty good. Look at you. Actually went pretty good. It increased, but I think it's really because of the global demand. So even if Australia or New Zealand actually increase, it will be for the short term. So that's how I would look at it. Again, I'm not a financial advisor. I'm just a regular person like you, trying to figure out everything, trying to decode the matrix. That's who I am. So now it started off strong. An increase, meaning supply is coming back into better balance with the demand, and the overall activity economically is improving. That's what I'm getting from it. The overall economy is stabilizing. Um, yes and no, I would say. Not with the New Zealand economy. They was doing pretty bad. So I don't necessarily think that they're stabilizing. Um, but so this reading could be volatile due to broader economics, which we was talking about globally. You always have to take more than just one factor or two in consideration when dealing with trading and investing in forex, for sure. Now, what I got from a article, it said the reader underscores continued struggles in the manufacturing sector despite recent RBNZ rate cuts. So the Reserve Bank of New Zealand, that's what RBNZ stands for, they did a rate cut recently. Now, weakness across production and employment indicators. I guess I didn't finish that sentence, but there has been things that's been pointing to that. The reason why I'm not really banking on New Zealand going up, but so much. You also have the services and composite services, which is dealing with the demand of the New Zealand for the start of Q1 was strong. Composite sector for the start of Q1 was strong as well, as we see here. Now, one of the articles said a closer look at the components reveals a mixed picture. Noted that the PSI reflects stabilization rather than elevation. Okay. Highlighting that while the upward move is a positive sign, the sector is far from robust growth. So with me, how I'm interpreting, I'm gonna keep that in mind. Though even I might see the Kiwi actually appreciate, I know that it's limited, right? It's just a, you know, maybe investors is taking advantage of a certain play in the market, right? That's how I'm interpreting it. And let's see. So all this is old, old, old. Now we come into here. Electronic retail card spending. Okay. And this is kind of some what I was going off of what the data is coming off of this week, right? Um, so it has gave insight on how consumers feel. Now, some of this is old, so I'm not gonna go over this at all because this is old. I gotta fill it in. Like I said before in the previous video, I had to take myself out of the market and kind of relax. So now my thoughts on this is possibly consumers are not confident about the not confident because of the uncertainty and weakening of the New Zealand dollar, but it is the New Zealand economy. I need to fix that, but you understand what I'm saying. Right now, they're not spending as much, and in the economy, you want the consumers to spend. That's what make the world go round. That's what make the economy flourish. And looking at these readings right here, um, it's as expected year over year, but it's still in the negative territory. Even if you look at month over month, which pretty much provides like the underlining things, they're not feeling it, right? Now I need to take a little bit more look into the meaning of this, but it's just like with the U.S. You spend, 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 right? This could be a good or a bad sign, right? Because if you spend so much, then the credit, you know, you know what I mean. So I don't know everything there is to know about that, but I do take that in consideration when I'm trying to understand the mind of the consumer in the economy, right? If that makes sense. But I need to do a little bit more research to be honest with you there and figure out the pros and the cons and how to apply it in those different scenarios, what I was just saying, right? Let's see. So all this is old. Definitely we'll be looking at this session because of what Donald Trump is actually doing with the tariffs. So definitely want to pay close attention to the trade partner sector. Now we do have an update with New Zealand. Now this is dealing with the indication of a slowdown in the economy as it may suggest that consumers are starting to spend less on foreign goods and services. Now, also it deals with interest rate differentials with the U.S. or just in general. Now, you see what the balance of trade in the start of Q1 was pretty bad. You have the negative here. Exports definitely went down from last time. And now you're importing more than you're exporting, right? We'd like to see when these numbers come out for the prices and import and export prices and whatnot. So, again, we'll be monitoring to see how tariffs can impact this data in the future or even just gauging what can happen in meantime between time. Global dairy trade price index has went down as well. If I'm this goes to China as well, if I'm not mistaken. If I'm not mistaken, don't quote me on that. But it's their commodity and their economy. So that has been going down significantly, and it's honestly it's volatile. I know it goes up and down, but mostly keeps coming back down to the negative territory. Now, dealing with the central banks, RBNZ, Reserve Bank of New Zealand, also had an interest rate monetary policy meeting as well recently, and this occurred February the 18th. So this was the previous week that passed. Now it says that if economic conditions continue to evolve as projected, the committee has scope to lower the OCR further through 2025. So this is to me is a little bit of foregroundance, right, of what they're going to do. They're looking to cut if the economic conditions continue as they plan. Um, Sometimes they just be giving you the answers. Now, according to the latest projection, the OCR is expected to decline 3.1% by year end and remain at the level until early 2028, y'all. 2028. So economic activity remains subdued. This is something to take a look at. economic activity remains subdued, meaning that I'm not looking for long term trades with New Zealand nor Australia. And if I do take a buy on these trades, it will be for the short term. So I might, instead of me might trade to a 4 hour or 1 hour high, I might snipe the trade, of course, and trade it to a 15 minute high, right? Depending on the risk and risk management and everything like that. So it's just like you just gotta be dynamic on how you approach the market or be in the market if you're gonna play this game. So though it expects growth to recover in 2025, driven by lower interest rate, encouraging spending, right? With them lowering the interest rates. Okay. So they're looking to help the consumers out there. However, elevated global economic uncertainty is likely to weigh on business investments. The bank also noted that inflation is expected to be volatile in the near term. So now we kind of know that we're gonna have to look at inflation a couple of quarters for real, since it's gonna be volatile. So don't get hung up on certain data that come out for 1 or 2 months, right? Um, let me see. The bank also noted that inflation is expected to be volatile in the near term, influenced by a weaker exchange rate and higher petrol prices. So oil got something to do with this currency, and that's going to be dealing in the weight of inflation. So that's all we have here for the New Zealand dollar. So looking at the charts, right? Let's go to the monthly real quick. Right now, it's look at this. This is important level right here on a monthly. And look at these candlesticks. We move this up here. Right? Look at these. This might spring up. We got these deceleration candles. The momentum stopped. Okay. I see you. So let's look at the weekly. All right, we in consolidation right now. Ain't really making no moves in consolidations, but is that a monthly and weekly support? Remember that. The higher time frames, king, right? Market structure, king. So right now it's consolidating. You really can't do much. I'm gonna flip it to the line chart, see what's going on in here. And what I'm seeing right here is that price did break out of this consolidation right here. So we made a high. In order for it to be in an uptrend, you're making higher highs and higher lows, right? So that means a higher low had to be formed, and it came down. Boom. Okay, now we're on our way up. So now it's working on this internal structure. So if I can get, let's flip back. If we can get this to flip down here, come pull a little bit down here, just a little bit. I want to trade it to this level or this level right here. 49.5, 49.5 is what I'm looking at on the index. Now, I seen something that I want to point out. Not really a fan of, but I might trade. So take a look at AN. I'm doing this off of, to be honest, technicals, right? So right now, monthly, let's go down to weekly. Weekly, look at this. Now look at these big candles here. This is how sometimes I approach with the technicals. Look at these candles. Look what it say. It took a big candle to thrust through a little bit here. Okay, well, we never broke this level since God knows when, right? So we came back. This is a 2023, and it's been sustaining. Big candle here, okay? So big candles here. Something's going on here. Now the week closed with a pin bar, a bearish pin bar. Pretty sexy, right? Okay, so now what I'm looking for here, possibly a trade, right? I'm looking at it, see how price will actually move. So on a weekly, we had a pin bar at a strong resistance on a weekly. I am looking at this daily here, a change of character. We're going to get into all this. I'm going to start posting certain things, but a change of character. And I see right here off of this line chart right here, okay, that it went through. And with a candle, it's a bearish engulfing. Okay. All right. So breaking it down to a 4 hour. What I'm looking for on an AN is that if you can pull back up here somewhere, do a nice pullback, and make it maybe a head and shoulders. I'm gonna sell down. I'm either gonna probably sell just down to here, for real, because I'm not in it for a long time. Just here for a good time. All right, right. If it breaks down and pull back again, I'm gonna sell it here. But right now, if it can pull back, I'll probably sell down to here, possibly, or here. But most likely, probably be here. I'm not trying to be greedy. But that was a possible play for AN. That was the outlook for New Zealand. Next up, I actually work tomorrow, so I don't know if I'm gonna be able to do all that. But I want to keep posting. Hopefully, meet some people out there because I know y'all out there, man. We trying to crack the code, man, because people making money off of this, right? And it's our time. So that was my analysis on New Zealand, man. So drop another one. I hope you like the video. Like, subscribe. Let's politic. Peace.